All right, let's dive a little bit deeper into the market action. Abigail, get us started.
Romaine, I'm thinking about the S&P 500 almost closing at a record high, but during the day in the morning putting in a new all-time high, also going back above 3,000. One question, though, is that a psychologically important level, or is it really important for the technicals? We'll be tuning into more on that in Smart Charts at 4:40. But right now, let's take a look at this chart we've looked at many, many times since the beginning of June. It goes back to December of 2017. The biggest point here is there's a huge range. Nobody knows. The bulls and the bears are really duking it out in these volatile swings. More recently, though, the S&P 500 appears to be moving into this pattern that we've been noting, suggesting that the S&P 500 is actually confirmed for well above 3,000. Right now, about 3060. But the bigger question will be, if that does happen, Emma, will we then see the S&P 500 drop back down into this range? It is a bearish formation overall, fitting to all of the uncertainty. But right now, it does look like new record highs will be ahead for the S&P 500, which will probably close at some point soon above 3,000, at least looking at this chart, Emma.
Abigail, the rally is back on for gold. I've been keeping an eye on futures today, rising some 1.3% and extending yesterday's gains into a second day. Of course, the comments from Fed Chair Jay Powell fueling that rally again. Gold bulls will, of course, have liked his comments, which suggest that a rate cut at the end of July is all but certain. But they will have also liked the caution we heard on the global economy, on the trade war. All of that is bullish for gold. But what we're actually seeing here, if you take a look at this G chart, is really a revival of the gold rally. Here we're looking at gold over the last few months, and you can really see its stellar rise since the end of May through June. We retreated a little bit last week on the strength of those jobs numbers, the unexpected strength of those jobs numbers. We dropped back below $1,400 an ounce, but we're back above it today, and at least one analyst saying that we're likely to see $1,500 an ounce before the end of the summer. Renita.
Just as you say, Emma, gold is back up, and we do see fear and volatility driving that chart today, driving investors to it. Now, remember, gold does not draw interest, and because the Fed is a little bit more dovish, we know that lower interest rates actually make commodities like gold a little bit more competitive against the asset-bearing or against the interest-bearing assets. Now, gold posted 2 straight monthly gains on a prospect of lower rates, and we know that analysts, just as you say, are saying that from the medium to longer term, gold will actually get more bids as this uncertainty continues.